Welcome back, everybody, to another cryptocurrency news article. This one's coming out of Cointelegraph and Australia to impose capital gains tax on wrapped cryptocurrency tokens. This is delivering a major hit to Australian crypto investors. The ATO stated that wrapping or unwrapping tokens, irrespective of their price at the time, will subject to a capital gains tax. So it's always good to know the laws when it comes to taxation on your cryptos. Like when you buy, it doesn't trigger it. When you move it, it does trigger it. When you sell it, you trigger it. So it's always just good to stay up to date yearly on what the new tax laws is. And this is for all the Australian users out there. So let's dive right on into this article and a little bit more. The Australian Taxation Office, otherwise known as the ATO, has issued guidance on capital gains tax treatment of decentralized finance and wrapping crypto tokens for individuals, clarifying its intent to continue taxing Australians on capital gains when wrapping and unwrapping tokens. Now, in May of 2022, the ATO outlined crypto capital gains as one of 4 key focus areas, building on the initiative that the Australian taxman recently clarified a raft of taxable actions in its jurisdiction. The transfer of crypto assets to an address that the sender does not control or that already holds a balance will be regarded as a taxable capital gains tax event, and the ATO said in its statement, the capital proceeds for the CGD event are equal to the market value of the property you receive in return for transferring the crypto asset. Now, the ATO added, however, the capital gains tax event will trigger depending on whether the individual recorded a capital gain or a loss. A similar approach has been considered for taxing liquidity pool users, providers, and DeFi interest and rewards. Now, in addition, wrapping and unwrapping tokens will also be subject to triggering a capital gains tax event, the ATO stated. When you wrap or unwrap a crypto asset, you exchange one crypto asset for another, and the capital gains tax event happens. Now, the above statement clarifies that wrapping or unwrapping tokens, irrespective of their price at the time, will be subject to the capital gains tax. Now, Chloe White, the managing director of Genesis Block, who is also an advisor to Blockchain Australia, claimed that the ATO is in breach of the technology neutrality principle, which ultimately impacts the financial future of young Australians. Now, adding to the pressure on Australians, the local crypto exchange CoinSpot reportedly got hacked for $2.4 million in a probable private key compromise over at least one of its hot wallets. As previously reported by Cointelegraph, Etherscan shows a transaction totaling of 1,262 Ether worth $2.4 million was moved from a known CoinSpot wallet to the alleged hacker's wallet. Now, subsequent investigations found that the stolen Ethereum was being swapped for Bitcoin via Thorchain and spread out across different wallets and addresses. So why did that get added into this article? The managing director of Genesis Block, advisor Blockchain, claimed that the ATO is in breach of the technology neutrality principle, which is adding pressure. Okay, so just because it's a hack that happened, it's adding pressure to the ATO, which is the Australian tax office out there. So just now you guys know if you are turning a wrap coin into a not wrap coin. As for Australian users, it's considered a taxable event in the eyes of the Australian government. So there you go. I hope this article helped you out, especially if you're an Australian crypto user. But if you guys enjoyed this article read through, smash that thumbs up for me. Subscribe to the channel. And until next time, the Crypto Sherpa is out.